Jim, we had you on the show a couple months back. I think it was around here in June. I don't know, somewhere in this area. I can't remember exactly the date. But your message to us was be bullish, but be prudent. What is your message now?
We're still in a transitional phase. The market acts really well, but until we get net new highs in 300-400 a day, net highs over lows, or even greater, we need the Russell to come out over 2,000. I mean, look at how new lows just recently was wild. Go over where you just were.
Yeah.
Bottom six. Look at that. That is not indicative of a confirmed bull trend. The market, if this is a new bull, it is so early. There is no speculative fever here. I mean, we had a couple names like SMCI, but we need this to really broaden out. This can go, if this is a new bull market, it could go 18 months to 3-4 years. There is no irrational exuberance in the market. It is, people are still licking their wounds. Most people are definitely down over the last 2-3 years. I still think I think people who use this method could easily have 50 and 100% years this year. It is just getting rolling. It's hard to believe how much money and what percentages you can achieve in such a small period of time. But look at that. It looks like a cup and handle. We just cracked under the 50 by about 3 or 4%. The max drawdown from the high was about 9. So it stays at the extreme end of garden variety digestion, but still healthy. Apple has recovered over the 50 again. The market's over the 50. These are really important things. Apple rejoining the party is very good. And people flipped out about NVIDIA's reversal on earnings, but it was one day. It was not a trend. And now look at you now. It's about to pop over 500. Livermore mass, big round number. I have to tell you, I think NVIDIA is the most important company in the world, and I think it's deserving of the largest market cap. I think NVIDIA is going to be the largest company in the world. And people are like, well, it's already gone up 300% this year. Yeah, take a look at what monsters do over in history. Okay, give it 5 years, give it 3 years. We'll see where it is. How about that?
Yeah. No, and so you talked about you're not seeing that level of exuberance. So is that like if you were just starting seeing a bunch of speculative names starting to go vertical and a lot of that froth in the market, it doesn't seem like you're seeing that out there. Can you explain that a little bit more?
Well, we haven't even had any meaty IPOs. The IPO market is still virtually closed. There's some filings, Instacart, but we're just not seeing crazy behavior. It's not a frothy market. I mean, Alan Greenspan is not saying irrational exuberance. He's saying we may raise rates. I mean, we're just the opposite. This is so early. It's like the batter is possibly come out of the dugout and he's up around the pitching, around taking practice swings. It's the levels of extension we've seen in the indexes and leaders have not been in magnitude or in percentages frothy. It's so early. If it is a real bull, and I'll tell you this, if you take a look at something like a Peloton or a Zoom, we have ended a terrible growth bear market. If this market rolls over, it'll be the 5th largest, most severe bear market in history in duration and price. It'll rival the 08-09 and the 2000 bear. If we go and make a new low again, please look at the Russell 2000 and go to, this thing has got to come out over 2000. We've got to get over 2000. It hasn't come out yet, and neither has MDY or IWC. These are still in bases. It is so early. And I have to say, if the market does roll over, let's say the Fed overcooks this and the market makes a new low, with all the money spent on R&D, biotech alone spent $141 billion in R&D in 2021. If these companies come out and they come out with a new product, say they earn $1 this year, and they're going to earn $14 in 3 years, and then Russell makes a new low, the valuations of those stocks are going to go to such ridiculously low levels that the rubber band, when it springs back, it's going to be one of the greatest bull markets we've ever seen. So I'm almost cheering for a new low in the market. I know that sounds crazy.
Just to really have that kind of washout, you're saying.
Yeah, it would be, it's hard to believe that that could happen, but anything could happen.
Mhm.
And if it does happen, I want you to do the opposite of what your emotions are. Everyone's going to be like, this is the worst. I'm going to have to wait another 6 months or a year. Could you wait 6 months or a year to get into one of the greatest bull markets we've ever seen? If you don't, you got to take another job. You shouldn't be in this business.
Yeah. And so as bullish as you are, you're prepared for anything. So if, we had a follow through day this week, that is a rule to be adding exposure, but it sounds like you're prepared for all scenarios. If you have to back off and walk away and shift gears, you will do that. But if things start ramping up from here, what would you be doing? How aggressive would you be if it really
Extremely.
looks like we're gonna start taking off again a next leg higher?
Extremely aggressive. I think right now nobody should have gotten out of the market completely in the pullback we just ended.
Mhm.
And I think that on now, listen, follow through days are not all created equal. There
For
was a
sure.
dearth of great ideas on the last follow through day. So I was screening all day so I ended up just putting more money into things I already have, but we need this market to broaden out.
Mhm.
And how aggressive can I be? Really aggressive. I mean, the days of me going, 180% on margin are probably over, but I'm definitely a user of margin in the right circumstances. And I can move so fast. I mean, on the follow through day, I got very aggressive and I overcommitted and I recognized, I think you can be aggressive, but when you're wrong, the key is how fast do you recognize it and how fast do you reverse your position? There's nothing wrong with being wrong. You're going to be wrong a lot, but how fast do you go, whoa, I have too much exposure. I'm in the wrong name, reverse. And I mean, you could reverse within an hour. So
Mhm.
that's a lot
Yeah.
of work.
No, you really need to be prepared for those scenarios. So, Jim, if we can compare this market right here to one in the past, I know a couple of guests on our show have brought up the 2003 bull market and perhaps some similarities there. I know when we were still in the bear market, I was talking to Charles Harris about that, and he was explaining, if you miss those first early setups among the leaders, they offered more chances. They eventually set up again and offered new bases. Is that what you think we're seeing now?
I think that the amount of pitches being thrown of TMLs is fairly low. And I think Charles is 100% right. These names are all going to digest at a certain point. It's just a matter of how powerful they are, how much they digest. But okay, so when we're in a bad market, I'm really cranky and I say things like, you'd be crazy not to buy anything that is not a fully matured base. But when the wind is in your sails and I have missed a leader, I then identify it later as the leader. If I know the total addressable market and where it is in its cycle, I'm willing to take added risk to get into these names
Mm,
and start a whole position on a pullback to the 50 or possibly even the 21. I think the 21 moves so fast that the stock's got to have that personality where it catches support at the 21. But
mhm.
I'm willing to take added risk when the market is in a green light in an uptrend just after a follow through day. And so I might start whole positions in names I've missed at places that are higher risk entries with the full knowledge that the odds of getting stopped out are way higher.
Right.
There's always going to be ways to work into the leaders when you know you've missed them.